Hey investors, the market doesn't seem to be bottoming, and I've been calling this out for about half a week or 1 week. It is tough. And today we are going to look at something that is different and very interesting also. You can also use these right for yourself. Personally, I am looking at SMH divided by VIX. What this does, you can also apply this with your QQQ or SPR or whatever things that you're looking at. So what this does, right, is that in the event the market is on a bull run, so it's very complacent, stock price goes up, generally VIX will go down. When you will see that the trend line is going upwards, it means that market is risk on. The event that the trend line is going down, is risk off. And just want to look at things from a slightly different angle and see how it goes. So this video will be more applicable for you, especially if you are also invested in the semicon sector like me. If not, you can just skip through. So over here, I identified 4 different lines over here. We are currently sitting on the first line, which is a potential support, and we may just bounce from here. But then looking at the current trend line, it is still aggressively going downwards. We have not broke out of the immediate downtrend, so I'm not too sure yet. When might be the bottom? So there's also a second line of defense, right, whereby it coincides with 2024 August Japanese yen carry trade. If there's ever a zone, right, where I feel that very highly likely will be the bottom, then that will be the third line, because it coincides with COVID crash 2020 March and also August 2022, and then so this will be that zone of confluence with a lot. And let's say if market were to continue to plunge all the way to line 4, which is COVID level, each of them I do have my own strategy as well. So I'm going to share with you guys a little bit in this video, but of course don't copy blindly, because our positioning is very different, strategy is also very different. So in the event that market were to continue to go up from here or continue to go down from here, I will just maintain my weekly option strategy. But let's say if the market were to go up, I will rebalance my entire portfolio, which means that I'll sell off everything at a slight profit. And I think that is a pretty good win, because my underlying ETF has dropped 72%, and yet I can still get out at a slight profits. I think it's a pretty good deal. And once I do the rebalancing, if the market were to continue to go down, then that is when I can start to do very aggressive stuff. Even though as usual, I will still scope my range of risk, but by then, my positioning will be much more aggressive and much more effective as well. And in the event the market will continue to go down to zone 3 or zone 4, like line 3 or line 4, I will activate this strategy, what I call the Phoenix Moonshot. So generally, what it does, how to go about it, is we sell lead put option to get funded with a large sum of cash. Eventually, we use the sum of cash to buy multiple layers of call options onto the long side of things. And that wouldn't be a weekly kind of trade. That would be a long-term trade. So to some extent, I am rather curious and excited to test this. But that will mean that a lot of people will be feeling uneasiness and all, because the market continue to go down. So shall see how. And with that, I'll end off today. I'll see you again next week. Bye.